All right, hello, welcome traders. It is February 11th, 2025 here today. Tuesday, and I want to share something different with you today. Normally going over charts and going through the accounts and giving you some trade ideas, but I really want to focus on really some of the keys to being successful in trading. And I really want to get into what I consider the 10 commandments of trading. So let's get into that, part of a training course that I have for traders, and I really want to give you some of these things to think about. So I want to think, I want you to not only listen, take a view of what I'm sharing with you, but at the end, when it's done, I want you to go back and start to think, how can I incorporate these trade rules, these commandments into my trading? Which ones are you good at? Which ones are you not good at? How can you improve your trading? Because it's always a journey to improve, tweak, learn, and grow on a consistent basis. Okay. When I train a lot of folks in not just the trading aspect of things, but in business aspects, I'm looking for people to have that learning mindset. Okay. I love the comments in YouTube. Everybody, you all know it all, apparently, that drop comments in here. I appreciate those that are thoughtful and ask good questions. Those that just want to lecture me or tell me things. I love how they all know everything in there and love to be negative. But what I'm going to do here is, again, be positive and give you some things to grow with. And hopefully you can take these things and learn to grow and have that mindset of growth. And I don't know everything. Okay. The saying, I use it a lot of, if you're the smartest person in the room, you're in the wrong room. Well, I want to surround myself with really smart, good people that not only challenge me daily, but I can learn something new from them. I'm always open to learning. So hopefully you are too. Let's get into it and let's cover these 10 commandments of trading. All right, let's rock and roll on this. Number one, my favorite, plan your trade and trade your plan. So if you trade without a plan, it's like driving blindfolded. You might get lucky for a while, but disaster is inevitable. So you got to have a plan. You got to execute that plan. So develop a structured trading plan, write it down. It's got to be written, can't be up here. Okay? It's got to be written, organized, defining your strategies, what preferred stocks or underlyings you may have, what key indicators you're going to use, entry points, exit points, and then how you're going to manage trades that may go against you, and just keep it simple. Okay? The best traders are going to focus on mastering one or two strategies versus chasing everything that's out there. So keep it simple. You don't need 90 strategies. Okay? You just need a couple that you can be consistent with. All right. Number two here, remove emotion from your trades. This is a big one. Emotions can lead to impulsive, irrational decisions. It's the hallmark of losing traders. The reason most traders fail is FOMO or letting their emotions get the best of them, that old greed and fear pieces. The masses will trade emotionally, but disciplined traders will trade strategically. So stick to your plan. Having that plan will help remove emotion from your trades. Remain objective. Accept losses when they happen. Don't blame the market. Learn from it. Okay? It's the point I was trying to make yesterday. I'm making that point again today. I learn. Hopefully, you learn from things, and we get better every single time. Trade according to your personality. This is a good one. I like this, but the best strategy is the one that aligns with your temperament and your lifestyle, the one that aligns with how you want to trade. Active traders who thrive on risk may favor shorter term strategies, while more conservative traders might take a longer time frame approach to things. If your trading is keeping you up at night, then really it's time to adjust your risk tolerance and strategy. You also, let's say you're closer to retirement and you don't want to spend a lot of time in front of the computer screen, pick those longer term strategies. The lazy trader account that I have, that's the whole reason it's called the lazy trader account, is because we don't make a lot of moves. It just continues to grow and compound without having to sit in front of your computer screen all day long. I don't want to do that. You might. And if you do, then maybe you want short-term swing trading, day trading, zero DTE stuff, whatever. Okay. Find what works best with your personality and pick those strategies and build that into your plan. All right. Make the trend your friend. So trading against the trend is a definite losing game. Okay. If you're in an uptrend, Avoid strategies that are bearish. If you're in a downtrend, don't try to catch a falling knife like Tesla right now. Okay. While it can turn around at any given point in time, it's okay to be a little late on that. Okay. Let trade with the trend, put the probabilities and strategies in your favor. Market tops and bottoms are nearly impossible to predict. Don't waste time chasing them. I'm a big reversal trader as a put seller, premium seller. I like to look at those reversal strategies, but again, I'm not trying to call the exact bottom. I'm looking to see where can something potentially reverse, and if it starts to reverse, I want to see confirmation of that, and if there is, okay, then I'm moving forward. And I love using RSI or MACD along with my trend lines to pick those places where I think a good entry point on a pullback might be so that I can sell more premium. All right. Number 5 here, employ strong risk and money management. So only trade with money you can afford to lose. Never risk essential funds. My trading account is not my entire net worth. You should not be trading with that. Maybe your trading account is 5, 10, 20, 30% of your total, net worth. Okay, but it shouldn't be 100%. You should not be using trade strategies with your entire net worth. Okay, come on, it's common sense. Size appropriately. Okay, and limit each trade. I'm going to say limit each trade to no more than 2% of your capital. Okay, I'm even going to remove the 2% for larger accounts. Okay. Now, if I have a smaller account, maybe I'll risk 3 to 4% per trade, but typically I'm looking to risk no more than 2% of my capital or my net lick, okay, as a loss. Okay, so making sure that you size appropriately, and then also diversify across time frame strategies and assets to minimize risk. Don't put all your eggs in one basket. Don't be too heavy on any one strategy, and you don't need a lot of different assets either. So you don't need 20 different, 15 different, 150 different assets. All you really need is a few that are already diversified, like SPX, okay, or the Qs. So if I'm trading SPY, the Qs, maybe a couple ETFs, you probably have everything that you need right then and there. You don't need a lot of different assets. You can diversify by strategies and time frames. Okay? Maybe you're trading some shorter DTE, some longer DTE strategies, and some different strategies within those. All right, so money management, employing risk, and only trade with what you can afford to lose. Okay, it's a trading account, people. Okay, this is trading. This is not investing. There's a big difference in this. I can't emphasize this enough, especially all the critics that seem to come out of the woodworks every time I post something. It's fine. Okay, but I don't know why you watch a 20-minute video just to post something negative. But anyway, if that's your life, that's fine. Okay. I like to surround myself with those positive folks here. But again, it's trading. You've got to take some risk in trading and only trade with what you can afford to lose. You don't throw all of your money into one or two strategies. All right, let's keep moving. Track every trade. So great traders will analyze their trades weekly, monthly, annually, and they're going to keep the strategies that are working the best and get rid of maybe or adjust ones that aren't working well. Identify strengths and weaknesses of the trades. You keep a trading journal. Why did you put a trade on? Why did you take it off? Okay. Understanding your whys here. I have notes on many of my trades as to why I ended it early, why I took it off early, why I deviated, okay, or why I put it on to begin with. And then adapt and refine your strategy based upon performance insights. Okay. If something works great for 4 years and then it has a couple bad weeks, months, what have you, you don't necessarily have to throw it in the garbage. What you have to do is figure out, why didn't it work? What could we do to make it better? Okay, I've done this with the 112 trades and other trades. I've done this with strangle trades. I've come up with my own versions of things that I think are improvements based upon what I'm seeing by tracking my trades. All right, number 7 here, let probabilities work in your favor. So trading is a game of strategies and probabilities, okay? But really these probabilities are key to you, okay? Some short-term losses are normal, but long-term consistency is the key. Put out a video yesterday about staying consistent, staying true to your trades. Give them time to work out over the long run. Let positive expectancy play out. Stick to your system. Okay? Don't change impulsively. You have a bad day. Let's say you take a serious drawdown. Okay? I will admit I've had serious drawdowns. Okay? For the last 40 years, I've had multiple major drawdowns. It happens. Okay? If you stay in the game long enough, you're going to have major drawdowns. Okay? The key is you don't just throw it all in the garbage. You learn from it. Okay? You let the probabilities play out. You make your improvements we just talked about. Okay, but you got to let positive expectancy play out. If you're only trading a strategy for maybe a couple months and then you hit a string of losses and it wipes out most of your gains in that strategy, okay, do you just throw it away? Okay, well, I only put on, and this is a great example here in Volmageddon, not August, but earlier on in gold, when gold volatility spiked and traders lost a bunch of strangles in gold, like 4 in a row or 3 in a row or something like that. I lost, I think, three strangles came off in like one day as losers. Okay. But I didn't stop the strategy. I kept trading it because, again, if you have those 3 losers, yeah, it sucks if you just started that strategy right then and your first 3 trades are losers. Okay. But all kinds of people quit the strategy, yet I stuck with it, and it ended up being one of the top most profitable strategies of the entire year. Okay. So just because you have a couple losses doesn't mean you throw it all away. Okay. You got to let the probabilities play out. And it's the law of large numbers. You've got to put on a lot of different trades of that from that strategy and stay consistent so that positive expectancy can play out over time. Positive expectancy is absolutely key. All right, never revenge trade. Losses are part of the process. Accept them and move on. Okay, you're going to lose trades. Yeah, it happens. Move on. Okay, because we didn't put all of our money in it. Okay, with strong risk management, we're learning from it. Okay, you take a loss, you move on. Okay, I have the memory of a goldfish. I forget what happened yesterday. Okay, I forget losing trades. I don't stew over them, and I never ever look back to see what if. What if I hadn't closed it? What if I hadn't stopped out? Would I have won? I don't care. I move on. Okay, stay disciplined. Only enter the trades that align with your plan. Okay, and don't keep chasing losses with impulsive trades. Okay, because that's just going to get you killed. So don't revenge trade. Number 9 here, don't chase the holy grail. Okay. Ignore all of the noise from social media and internet gurus and market hype. You can throw me in there if you want. Okay. Don't chase the holy grail. Okay. We haven't found it yet. There is no perfect strategy. Only choose strategies that fit your style and your risk tolerance and your goals. Okay. I might do well with Strangles. You may not like it. It doesn't fit your style. It doesn't fit your risk tolerance. It doesn't meet your goal needs. Don't do Strangles. Don't do leaps. Don't sell naked puts. Okay. Don't even don't buy options or don't trade the 1-1-2 or don't trade ratio spreads. Nobody's coming up with like some holy grail trade that's never been done before. Every trade has probably been done by somebody else previously over decades and decades and decades of training. The key is some of these just aren't well known, and B, okay, maybe there's a different twist or take that you might have on it, okay? But don't just keep jumping from one to the next. Stay consistent, okay? Consistency builds success. I'm going to say this again, okay? This theme is coming through about consistency. Don't jump from one strategy to the next, okay? And then lastly here, surround yourself with experienced mentors who promote discipline, patience, and strategy-driven decisions, okay? Don't keep chasing things. Just because somebody posts something, I don't care who it is, me, anybody else, okay? Just because I post something doesn't mean you should go and adopt it, okay? You need to back test, and model every trade on your own. You cannot take someone else's word for it, okay? You might see somebody out there getting 10% return, a month or something like that. Great, okay? If you really want to tweak what you're doing, see what they're doing, see if it makes sense for you. Can you easily replicate their strategy, or are there things they're just not telling or showing you, or is the amount of risk they're taking way too much for you? If you're making 10% a month, you are taking an inordinate amount of risk. I'm shooting for 2 to 3% a month, which is still risky. Okay? Make sure this aligns with you. And then the last thing here is sometimes the best trade is no trade. Being in the market at all times is not necessary. Just because a trade comes off doesn't mean you have to scramble to put a new trade back on. And just because your buying power is under 50% or whatever your mark is, doesn't mean, oh, I got to get back to 50%. I got to throw trades on. Okay. If you can't find a trade or an opportunity, just wait. Okay. Another one will be coming around the corner. If nothing meets your criteria, don't force it. Just hang on. The market isn't going anywhere. Just sit on your hands when needed. And when in doubt, stay out. There's always another opportunity around the corner. Okay. In the lazy trader account that I have, I can go a week or two without adding a new trade. There may be a lot of times where there's just nothing to trade, nothing to add. Strangles is one of my favorite strategies, but maybe I can't find any strangles. Okay, but I'm allocating 20% of my account or 30% of my account to strangles. I got to get one on. No, if you can't find it, you can't find it. There's going to be times too where I can't find a strangle, and then there's other times when I can't not find a strangle. In fact, I was looking today, and I think you can strangle oil right now. I think you can strangle bonds right now. I think the Nasdaq you could potentially strangle. I think the Aussie dollar you can strangle right now. I think small caps, the Russell, you can strangle right now. So there's always going to be these ebbs and flows based upon the setups. Let the setups come to you. There's always a trade somewhere, okay? But don't take trades just to fill up the bucket, okay, if it doesn't fit your trade plan. All right, I hope these 10 commandments were helpful to you. If you like this video, go ahead and click the like button down below. Share this with other folks that you may know. Happy to hear your comments, whether you like these or not. I'm sure it'll be negative naysayers out there about other strategies. It's okay. Focus on the positive stuff. Shut out the negative stuff out there. Keep that positive mindset going. And if you want to subscribe as well to the YouTube channel, feel free, come aboard. I'm just sharing what I'm doing, how I'm doing. And if some of that resonates with you, awesome. Welcome aboard. Let's go make some money together and learn from each other. Thanks, everybody. We'll see you later. Bye-bye.